All right. Good morning, everybody. Good morning, everybody, and happy Wednesday. Today's July 17th, 2024. And the top story this morning is the chip stocks are getting hammered here, led by NVIDIA, the SMH Semiconductor ETF, ARM, AMD, Taiwan Semi. Across the board, chips not looking so good here, although they've had a fantastic year to date. So let's keep all that in perspective. But for now, they are getting clobbered, down 3-4% across the board. And it seems like we've got this 1-2 punch. Both Biden and Trump, through two different avenues, are somewhat going after the semiconductor industry. And it all centers around China and Taiwan. Let's talk about the first one. Trump was at a campaign event yesterday or at the RNC responding to a question and basically said we should be billing Taiwan for their defense, which I guess now it's official that the United States will defend Taiwan. The whole strategic ambiguity thing is now turned into as long as they pay us. Okay. But, hey, that's beside the point. Taiwan apparently now needs to pay for it. I'm not going to get too much into the whole geopolitical commentary and everything. Just the fact that the semiconductor stocks did not like to hear that. Notably, Taiwan Semiconductor definitely didn't want to hear that one because, well, they're probably going to be the biggest target if that ever does pop off. And then, not to be outdone, President Biden was also in the news yesterday talking about chip stocks, basically threatening to use something called the Foreign Direct Products Rule to extend these export restrictions that we've placed on high-end AI chips to extend those restrictions to apply to European companies. And basically, you've got some big companies in the Netherlands and some big companies in Japan that are vulnerable to that. And what President Biden is threatening here is saying, hey, Europe, hey, Japan, you guys need to get on board with our trade restrictions with China and the chips. Otherwise, we're going to start targeting your companies as well. And again, the semiconductors didn't like that. And I'll be honest with you, I don't know which story at this point is really the bigger influence on the chip stocks. We also may have a little bit of rotation going on. Also, the chip stocks have run like crazy so far this year. So it's kind of hard to put my finger on it and say it was this one that's causing it or it was this one that's causing it. All I know is the combined assault, if you will, of all of these policymakers and, the revelation that for a chip stock, it doesn't really matter who wins this year because the end result is going to be the same. More trade restrictions with China. Semiconductors are just having a really rough morning. We also got earnings today from J&J. The earnings were okay, flat earnings. Revenue was down a little bit year over year, but it seems to be some light guidance is leading to J&J selling off a little bit this morning. We also got a warning from Spirit Airlines. They're expecting a much bigger loss than previously announced, mainly driven by those non-fare items. It's like, oh, you want to have room for both of your legs on a Spirit flight? Well, that's an additional charge. Do you want to breathe while mid-flight? Well, we're going to have a little bit of an upcharge for that one as well. It's a Spirit who is kind of famous for adding all these little tack-ons to your fare. They're saying those add-on expenses have been disappointing. I guess people are holding their breath mid-flight. And so Spirit Airlines is in trouble this morning. We also got results from Ally Financial. Ally's a big lender in the auto space. It's not the biggest bank in the world, $100 billion and change worth of assets. The results were pretty bad. They were pretty lousy, but they weren't as lousy as some feared. And so the stock is doing all right. It was down a little bit at one point. Net charge-offs are up. Loss provisions are up. Originations for loans are down. The auto industry is in a big rut here, but apparently the market was just expecting a lot worse. So this is being viewed as a positive for the company. Okay, that's a little bit of a strange take, but you know what? This market sees that silver lining, does not see the gray cloud at all. There's just nothing but silver linings. And it looks like Japan is hard at work intervening in Forex markets again this morning. The Japanese yen is surging once again. The Japanese finance ministry has been very active over these last couple of days. Masato Kanda, who has been announced that they're replacing him as Japan's chief finance diplomat, he's out on July 31st. It looks like he's going to go down swinging because we were just talking about yesterday how the Japanese finance ministry has dumped nearly $100 billion on the open market to try to prop up the yen recently, and it looks like they're doing it again this morning. We don't know how much, but you can definitely see it in the chart. And we got some inflation data out of the UK today, 2% inflation for the British. And that's pretty much exactly what it was last month, in line with expectations. And so the Bank of England is kind of on their way to the rate cuts that they're hoping to make. And the dollar's a little bit weaker because of that and the combination of what's going on with the yen today. So we got pretty much a weaker dollar, although that's not in time to save those chip stocks. A lot going on in the world today, guys. How about we shrink my big melon of a head and let's get into these stories, shall we? Don't forget that like button for the algorithm. And if you're new here, subscribe because we do this one every morning. Have your coffee with the melon heads as we go through markets. The S&P is down 1.00%, a percent clean here, 56 points to the downside, being led by those chip stocks this morning. The Dow, meanwhile, is down 121 points, or about 0.3%. It's worth pointing out that the Dow had a fantastic couple of days, up over something like 1,400 points in the last 5 days for the Dow to the upside, giving back some of that here this morning. And the chip stocks are really getting hammered this morning, leading to the NASDAQ down 300 points ahead of the opening bell, almost 1.5% down for tech stocks here, being led by those semiconductor names. Meanwhile, the dollar, we got down by 53 basis points at 103.74. The dollar was 105 a couple of days ago. We blew right through the 104s, now into the 103s here. This is being driven primarily by the Japanese intervention and that, we'll say, inline inflation print that we got from the UK this morning. And meanwhile, the bond market, we've got mostly higher yields here, a little bit higher, not by a whole lot. The 30-year is up 1.5 basis points at 4.389. The 10 years at 4.18, that's up a point, almost 2 points. The 2 years at 4.474, that's up almost 3 points. And the 1 month is at 5.353, down about 1 basis point this morning. So not a lot of movement in bonds here. Commodities, meanwhile, we got gold surging once again, 24.78 for spot gold, hitting a high this morning of 24.82. It's up another $10 here, almost 0.5% higher. So gold continues to surge. We'll look at that chart in a second here. Silver, meanwhile, not doing quite so well. Still over $31 for spot silver at 31.04, but that's down 20 cents or about 0.2% here. So Mr. Slammy is still in the driver's seat with my favorite of the shinies, but gold continues to rally. We've got coppers down about 0.33% here. Platinum is up 2.25%. Palladium is up 1% and change. And September WTI crude oil futures are at $80.56. That's above $80 again, up about 79 cents here, or 1% higher this morning. Check out the gold chart here, guys. Gold continuing to surge, making another all-time high today. That's a couple of days in a row of new highs for gold. Looking pretty good here. Maybe starting to get a little overstretched. It's been running a little bit, but hey, these rallies can last for a couple of days here. But the RSI is getting a little bit up there on the gold chart, so just be aware of that. But it's still looking pretty good here, well above its 50-day moving average, into new uncharted territory. I like the shiny. Silver, meanwhile, continues to lag its yellow cousin here at $30.98, or just barely below 31. It's kind of been consolidating right around this level for the last week and a half or so. Silver's got some catching up to do with gold in a big way. Bitcoin, meanwhile, continues to do pretty well. It ended up closing positive for the day yesterday. It's down just a fraction here this morning. It's down $202 on Coinbase, trading at $64,886. But Bitcoin has had a great couple of days since the unfortunate events of the weekend. But I just want to zero in. Check out that candle yesterday. Look at that big wick at the bottom of that candle. I mean, we sold off pretty hard yesterday, bounced right back above the 50-day moving average. That is a majorly bullish looking candle, in my opinion, right there. Bitcoin is looking pretty good here. And according to Zero Hedge, they put out this chart. We've got a 1 month high on Bitcoin ETF flows. Here is the flows from yesterday. All of the ETFs saw positive flows or none at all if you're grayscale. Over $400 million combined added to Bitcoin ETFs yesterday. So the market continues to buy here. Market still pouring money into those ETFs. All right, let's get into the main stories here this morning, those semiconductor stories. Here's the first one. And guys, typically I like to avoid politics. I just generally, I don't like the state of politics. Obviously, you know how I feel about that. But every now and then it overlaps so much with finance that you can't avoid it. So here's the first one. Trump says Taiwan should pay the U.S. for defense, and shares of chip giant Taiwan Semiconductor fall. Former U.S. President Donald Trump, who's vying for another White House mandate, said he thinks Taiwan should pay the U.S. for defense, claiming that the country doesn't give us anything. His comment was in response to a question on whether he would defend Taiwan against China as part of an interview with Bloomberg Business Week published on Tuesday. Beijing considers democratically governed Taiwan as part of its territory, and Chinese President Xi Jinping has previously said reunification with the mainland was a historical inevitability. Trump said Taiwan should pay us for defense. You know, we're no different than an insurance company. Taiwan doesn't give us anything, he added. Trump appeared to link his comments to Taiwan's semiconductor industry, which is one of the most advanced in the world. So, again, a slight deviation there from our historic policy of strategic ambiguity. He's just kind of flying by the seat of his pants there. And then maybe that was what is causing this big movement in chip stocks this morning, or maybe it was this one. U.S. floats tougher trade curbs in chip crackdown on China. So it seems Biden is also getting in on taking, I almost said the phrase taking shots, but we're not allowed to say that anymore. We got to tone down the rhetoric. So he is urging policy decisions contrary to the interests of the semiconductor industry in Taiwan. You see how careful you have to be with what you say these days? Good God. The Biden administration is facing pushback to its chip crackdown on China and has told allies that it's considering using the most severe trade restrictions available if companies such as Tokyo Electron and ASML Holdings continue giving the country access to advanced semiconductor technology. Seeking leverage with allies, the U.S. is mulling whether to impose a measure called the Foreign Direct Product Rule, or FDPR, said people familiar with the recent discussions. The rule lets the country impose controls on foreign-made products that use even the tiniest amount of American technologies. So this Foreign Direct Products Rule, it applies to things that are made outside the United States and sold to somebody outside the United States. In other words, the U.S. is not involved at all in this transaction. And yet, because it uses technology that was developed in the United States, we're applying this rule to it. And so we're telling ASML, which is a Dutch company, and Tokyo Electron, which is a Japanese company, hey, if you guys are using our tech, even if you're making it on your soil and then selling it to China, we will sanction you if you keep doing that, or at least that's the threat that's being made. Such a step, seen by allies as draconian, would be used to clamp down on business in China by Japan's Tokyo Electron and the Netherlands' ASML, which would make chip-making machinery that's vital to the industry. The U.S. is presenting the idea to officials in Tokyo and The Hague as an increasingly likely outcome if the countries don't tighten their own China measures, according to the people who asked not to be identified because the deliberations are private. So, you know, the semiconductor industry is getting it from both sides of the political spectrum here. So from the standpoint of a chip maker, it doesn't matter who is president next year in the United States. Either way, you've got issues here surrounding China and Taiwan. And you can see it in the chip stocks this morning. Taiwan Semiconductor down 5.6%, trading at $175.67 here. NVIDIA down almost 4%, 3.9% lower for NVIDIA, down almost $5 at $121.40. AMD down 4.25%, trading at $169.95 this morning. And then you've got SMH, which is the VanEck Semiconductor ETF. This is a good barometer of the industry as a whole. That one's down 3.5%, trading at $264.17, down 9.97%. And guys, I think if we look at some of the other big AI names like Supermicro Computer, they're down 3.6% this morning. Let's bring up an ARM Holdings. Let's see, ARM, they're down 4.5%. So it's pretty much across the board. Let's throw in Micron just for good measure here. Micron down 4%. So this is a universal sell-off in chip stocks this morning. That's why the NASDAQ is being dragged down so much lower here. Also, this is a sector that's just due for rotation. These stocks have all run like crazy this year, so it's not too surprising to see a sell-off like this. Really, anything could have triggered this. Looking over now at Johnson & Johnson earnings. This is, by the way, this is one that I own. This is one of the few stocks I still own here. I've been largely in cash for the last 2 years here. But J&J earnings top, but the Dow stock falls on lowered guidance. J&J edged lower earlier on Wednesday after the healthcare bellwether reported adjusted earnings of $2.82 a share on $22.45 billion in second quarter sales. During the year earlier period, J&J earned $2.80 a share and reported $25.53 billion in sales. So, look, EPS essentially flat, down a fraction of 1%. Not a big story there. Revenue down about 12.5%. That's pretty significant, from $25.53 billion down to $22.45. So, this is a consumer healthcare stock. To see the revenue falling, that's a little surprising there, although, hey, consumers are tapped here. Now, for the year, the healthcare giant guided to EPS of $9.97 to $10.07 versus its prior target of $10.57 to $10.62. So we got a pretty significant lowering of the guidance here. It still sees Q2 sales at $88 billion to $88.4 billion, but J&J stock analyst forecasts had $10.45 for earnings and $88.57 billion in sales. It looks like that lowering of guidance here is really driving J&J stock this morning, although it's doing all right. It was down more earlier. It was down about 1.5%. Now it's only down about 0.5%, trading at $150.21, down about 80 cents here. Now let's talk about this one, Ally Financial. This is one of the biggest players in the auto market here. Auto lender Ally reports stronger than expected debt management. All right, so this is important. Stronger than expected. That's very important. All right, it's than expected. It doesn't mean better. It doesn't mean results are improving. It just means they're doing better than we expected. This is one of the ways the financial press always puts a positive spin on every headline. Ally Financial's net charge-offs fared better than expected as the consumer-focused lender navigates interest rates holding at higher levels for longer than many analysts predicted. Net charge-offs increased by more than 9% from a year earlier to $435 million, although that's below the $481.3 million average estimate of analysts in Bloomberg's survey. So net charge-offs, that's when the company just says, all right, we're biting the bullet here. Oh, wait, that's another one I can't say anymore. We are going to eat this expense, and just these people aren't going to pay us back, so we're going to write it off, right? So that is up by 9% to $435 million, but not as bad as they were expecting. They were saying it could have been $481 million. So yeah, it's better than expected, but it's still pretty bad, up 9% from a year ago. A lot of people are not paying their car loans. Loan loss provisions. Now, this is the money they set aside for future loans not getting paid back. Loan loss provisions, the amount of firm stockpiles for loans that go bad, increased by 7% year over year to $457 million, less than the expected $488.3. So once again, the same thing, up 7% year over year, worse than a year ago. $457 million being set aside for people not paying them back. That's after $435 million already wasn't paid back and was essentially written off. But they're saying, hey, we were expecting $488.3 billion, so it could have been worse. Total U.S. auto loan originations decreased around 6% year over year to $9.8 billion in the second quarter. But Ally's CEO Michael Rhodes highlighted the strength of the firm's auto dealer financial service franchise. We're not going to get into the CEO talking points here. So, look, fewer people paying them back, setting aside cash for more people not paying them back. Auto loan originations down 6% year over year. It's a hard time for the auto industry. We've seen auto dealer inventories rising. We had that big CDK hack that just happened, affecting a lot of U.S. auto dealerships. That probably won't show until this current quarter's results because it happened at the tail end of the second quarter. But it's a really rough time for the auto industry here, and Ally is one of the biggest players in auto finance. Their stock is down 4.6% here. Despite all that positive spin about, hey, it could have been a lot worse, it's still, the stock is going down at $42.40, down $2.06 this morning. Also going on this morning, Spirit Airlines forecasts a wider quarterly loss as revenue falls short of expectations. More pain for the airline industry. We've seen a lot of headlines like this recently. People just aren't flying as much. And in this case, even the budget travelers are cutting back on what they're spending mid-flight. Spirit Airlines said Tuesday it would post a wider than expected loss for the last quarter because of revenue that came in short of expectations. Spirit expects to report an adjusted loss of between $160 million and $173 million for the 3 months ended June 30th. That's compared with previous estimates for a loss of no more than $145 million. It expects sales of $1.28 billion, down from a forecast of at least $1.32. So Spirit eating a big loss here. Previous estimates said, don't worry, we're not going to lose more than 145 million. Now they're saying that's 160 to 173. Their sales are coming down. They're lowering their estimates for that. Spirit said non-ticket revenue, which accounts for the myriad fees long associated with its rock bottom fares, came in several dollars lower than anticipated per passenger. Shares of the budget airline were down 6% in extended trading after the airlines released its investor update in a securities filing. The company is facing several challenges, such as an oversupplied U.S. domestic market, an engine recall from supplier Pratt & Whitney that has grounded dozens of aircraft, and fallout from a federal judge's ruling to block the planned acquisitions of JetBlue Airways. So Spirit's got no shortage of problems here, and meanwhile, Spirit stock down 5% this morning, trading at $3 even. That's down 16 cents ahead of the opening bell. And we got two more here we want to talk about. The yen jumps on suspected intervention, and the sterling hits a one-year high. We've got some movement overseas here. We've got the yen rose sharply on Wednesday in what traders suspected was likely the result of another intervention from Japanese authorities to prop up the battered currency from multi-decade lows. The move in the yen was a standout in a busy day in currency markets where the pound jumped after hotter than expected British inflation data, and the dollar dipped across the board with the dollar index dropping to a 4-month low. So this is one of the things that's driving the Dixie here. It's this movement in the yen. Let's take a look at this chart. And once again, zooming out, big red candle in the yen chart here. This is USD JPY. So remember, this is the number of yen it takes to make one US dollar. As this chart moves lower, that's the yen strengthening. As it moves higher, that's the yen weakening. All right, so look, here was that Japanese intervention on Thursday and Friday that we suspect happened right here. Here's the Japanese intervention that happened back in May and at the end of April. And now look at what's going on this morning. We got another big red candle right here. So we don't have confirmation that this is the Japanese finance ministry, but anytime we've seen a move of this size in the last couple of months, it's been Japan with their fingers on the scale, messing with the exchange rates. And I would add, guys, that this is the first time we've dipped significantly below the 50-day moving average on this chart since back in March. So a little bit of a breakdown here in the yen. Could this signal a reversal? I don't think so, because Japan hasn't resolved any of the underlying problems that are causing the yen to weaken, namely this massive arbitrage opportunity between Japanese and U.S. interest rates, and a 25 basis point cut from the Fed and maybe another 10 basis point hike from the BOJ. That's not going to be enough to close that gap. It's only going to shrink it a little bit. So you're still going to have this yen carry trade going on that's causing people to dump yen and buy dollars with it. So these interventions, they're really just temporary Band-Aid solutions. They, like we saw here back in May, yeah, they bring the chart down, but in the ensuing weeks, we just continue falling, or the chart continues rising here. Same thing here. If Japan doesn't resolve their underlying weaknesses in their monetary policy, which is this ridiculous modern monetary theory that they've been engaged in for years, then this is just going to continue, and they're going to have to keep intervening. And once again, I got to wonder, where is Japan getting their dollars from? Where is the big spike in interest rates? If Japan is really out there dumping our debt in order to get dollars, in order to sell those dollars and prop up the yen, then how come we're not seeing a big spike in interest rates caused by the Japanese dumping that debt? We're talking about $100 billion at least, probably more considering the move this morning, has been dumped in the Forex market by Japanese currency authorities. Where are they getting it? Is the Federal Reserve bailing out Japanese banks by increasing the supply of dollars in circulation overseas? If that's the case, are they really fighting inflation? Do they really care about inflation if they're going to increase the money in circulation just to bail out Japanese banks? Where is that in their dual mandate, if that's what they're really doing? I don't know that that's what they're doing. All I know is Japan is getting a lot of dollars, and they appear to not be selling their treasury bonds to get them. Also going on this morning, we got UK inflation holds steady as the Bank of England. Let me start this one over. UK inflation holds steady at Bank of England's 2% target, but slightly above expectations. The UK inflation held steady at the Bank of England's 2% target in June. Official national statistics data showed on Wednesday the headline reading came in above analysts' expectations at 1.9%, according to economists polled by Reuters, and was in line with the previous 2% reading in May. The sterling rose slightly shortly after the release, trading at 129 or $1.2977 London time. So, look, this is probably contributing to that fall in the Dixie this morning. It's also the yen is probably contributing to that. Inflation, look, I think 2% inflation is too much. I don't understand why 0 isn't the target. Well, I understand why. They want to endlessly debase the currency so they can keep up their policy of debt spending. I just think the target shouldn't be 2%. But that being said, UK inflation right at their target. So we're probably going to be looking at a lot of rate cuts in the UK in the months ahead. And UK cutting, European central banks cutting, the US is cutting, the People's Bank of China, I don't know what they're doing. And meanwhile, the Bank of Japan, it looks like they are going to be hiking. So central banks continuing to make a mess all around the world, guys. But political candidates and presidents and I can't even say targeting. You have to be so dang careful with your language here. Whatever. They're going after the chip stocks. They're going after the China-Taiwan story, and it's causing this big sell-off in chip stocks, and NASDAQ is paying the price. So it's going to be a volatile day. Keep an eye on that one. But will the dip buyers appear at the opening bell? We'll find out in just a couple of seconds. Thank you, everybody, for having your coffee with the Melonheads this morning. Thank you to all my channel members and Patreon supporters. Appreciate you guys very much. Looking forward to talking with you guys this afternoon on our this evening on our weekly get-together over Zoom. Links down below, should you feel so inclined. Hey, thanks, Cole, for the coffee. I appreciate that. I'm having a coffee as well. Appreciate the super chat, the support of the channel before we sign off there. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.